FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry Lutz here. And we didn't make it up to the Silver Summit this year, but we've got somebody on the line who did, none other than David Morgan. And David, how are you?
Doing well, Kerry. Thank you.
Hey, so Silver Summit, hopefully things were a little brighter this year than in the past couple of years. I know it's been a little downcast there. And what was the takeaway this year, David?
Well, I'd say it was an excellent show. That's number one. Number two is, the turnout was not robust, but it was very sincere. In fact, I got feedback from a lot of the vendors, not just one, but several, that said this is the most interesting group. They are the most knowledgeable, most studied, ask the best questions, have a depth of knowledge that I don't find in any other show. So that was a compliment to the attendees. And beyond that, I'd say that, we had the usual amount of speakers, et cetera. I mean, Michael Berry pointed out some very, very interesting things in his lecture. One of them being that he lectures to the Federal Reserve from time to time. And I knew that. He's talked to me about that in the past. In fact, I've written it up in the Morgan Report. But what he said was that the Fed is very, very concerned about controlling interest rates. So this is my take, my summary is, one, they don't really know what they're doing, and they're really fearful about, what control mechanisms they have as far as, if the market decides to take control of interest rates, what they can do to circumvent that. So again, that's kind of sort of my summation of it. But it was a very good show. I wish, I don't wish anything other than it was beneficial to everybody that attended. I would love to see a little more, participation, but nonetheless, it was, Silver Summit 2014, and lots of interesting people there.
Yeah, and you mentioned this guy, Bo Polny. Not familiar with him. Tell me about him and his prognostications.
I sure will. Bo Polny was a guy I met for the first time live. I've known very little about him, pretty much at a cursory level. I think I saw one of his interviews with somebody on Kitco, Danielle, I believe. And he came right up, and he's just got a lot of energy, very upbeat, passionate kind of a guy. And he introduced himself, and later on, it turned out that he was the speaker before me. So I was in the hall, early, and he's going through his analysis, and he does cycle analysis. And it was very, very interesting how much it fit on top of, what my work shows. But I don't really do cycle work. But, a lot of things I've said over the years, like, 90% of the move comes the last 10% of the time. The easiest money has been made in this market, but the big money lies ahead. But you've got to be very careful. And so what he did was he went through his cycle work, and in his work, it's a 21-year bull market. I say I don't know. I say that I think, 2016 or so, we're going to get a huge lift off, and, maybe into that year or 2017, but I don't rule out anything. The market's no more than anyone. But he says it's 3 sevens, a 21-year cycle, and that 2014, which we're in, obviously, is the second 7-year cycle for gold, and that we're going to start up here very soon. And he put up some charts and talked about the bottom is in for gold and silver very, very recently, and that we're going to start up, and we're going to start seeing some pretty big ups after the FOMC meeting that's coming right up here in a few more days. And he's still expecting very good price levels by the end of this year. So I had taken note of what he said. Of course, I had to do my lecture, and right after my lecture, I had a panel. And after the panel, I had some interviews, and on it goes. But I did catch up with him later, and I'm going to put out some of what he stated in one of his charts, the main chart on the bottom of the silver market. in my next month's report, which will be out this weekend. So very upbeat, it's kind of nice because everybody's kind of down in the mouth and feeling badly and thinking, it's never going to end. And I said earlier before I met Bo that I thought October would be the turnaround, that the stock market would start coming down, which it has, and the metals will start going up, which you could argue gold is. Silver's sort of waffling here, but it's up slightly from the lowest point. And just, really good news. It was nice to see someone, so extremely bullish on the metal still, and a lot of energy and that type of thing. So from my perspective, it was a very good addition to the show. It was his first time here at the Silver Summit, and I think he did an excellent job.
Yeah, now he called the top in 2011, if I'm not mistaken, right?
That's correct, and I did as well, but did it different ways. But yes, he did, and I actually spoke to him on the phone yesterday because I was getting ready to finish up the Morgan report for November, and I of course needed his permission to use some of his one chart. He sent me several, but I'm going to use one or two in the report, and we had a nice chat. But he does very short-term stuff too, which I don't do. But he's gotten good feedback. If you look at his website, et cetera, he's certainly gotten a lot of positive. And this would be more for a trader. I mean, not that you can't invest as well, which is what I do. I do both, but he's much more short-term trading oriented than I am. Yeah. But again, sort of that bright spot, so to speak. I mean, most of the people there were like, when is this going to end? And, from my sentiment calculation, which I'm joking, but, just from the feel of the market, it feels to me like we've had enough. I mean, so many people are thinking, silver's going to 14 and, gold's going to go to 1,000. And then you've got, people like Harry Dent saying the gold's going to 750. And, there's just a lot of negative sentiment out in the marketplace. And I think there's enough negative sentiment. I think that it's still so poor that, a turnaround would surprise almost everybody. And who knows? We may be starting, the turnaround may have begun and we don't even know it yet.
Yeah, that's true. You don't know until it's happened and you can look back. That's always the problem with forecasting. And it's always the, looking back in the past when you're proved right or wrong, right?
Yeah, pretty much. I mean, I agree with you. Definitely. It's very difficult to, especially bottoms. I'm pretty good at tops. I've been okay on the bottoms, but the way I trade, basically I make the market move through a certain level and maintain that level. And if it doesn't, then obviously you're wrong. But that doesn't catch the exact bottom. And it's an amateur's game in a way to think you can get an exact top and exact bottom every time. I mean, no one can do that I know. I've never met anyone. But you can get the trend, and that's what you want. You want to get in the middle if you're trading. And if you're investing, you want to get somewhere, into the near the end of the, within 20% of the bottom and out within 20% of the top. If you can do that, you're going to do very, very well. Yeah. So, Kerry, I agree with you. It's just, but, maybe you can catch my enthusiasm. I mean, I came back kind of charged up, not only from Bo's lecture, but, the comments from the vendors about how, great the people are that were there. The banquet went well. Tahoe Resources received the Silver Baron Award this year. They've got a very robust project. Their all-in costs are something like $11. I had a interview with Dr. Peter McGaw that'll be on for, all these films that I do at the Silver Summit every year. We put up for our Basic Plus members. That's one notch up from the basic membership where they get to watch all these interviews I do. And I don't even count them all, but I probably did like 10 and 8. I probably like 15 films. Mm-hmm. Dr. McGaw is always kind of one of the high points, and he talked about grade. And he's right. And we go through that again. And he's the one that taught me about Archie's Rule, which is one of the special reports that you get when you go into the members, protected members area of the website.
Mm-hmm. Interesting. So the only time I've ever been really successful at buying at the bottom was in 08-09 when I nailed the gold at 720, and I think I nailed silver right around $9, but that was purely luck. I'm the first to admit. Had nothing to do with any any particular ability on my part. I could tell you that.
Well, I'll give you some credit for that. I was lucky, skillful, whatever, in between the two, probably. I too bought 3,000 ounces at the $9 level, and was, as you recall, that discrepancy between the retail market paying about $13.50 for any kind of retail product. Silver rounds, silver eagles, silver 100-ounce bar, 10-ounce bar.
Yeah.
Any of the retail product was about 30-40% premium when the spot price was down under $9 at one point. And so I said, I'm taking advantage. Bought the commercial bars, those 1,000-ounce bars, and of course, for edification, everyone knows that they're really not exactly 1,000 ounces. They vary, but they're roughly 1,000 ounces. Sent them to a minting friend of mine, Golden State Mint. Sure. And Jim struck some half-ounce rounds for me, and I had retail products. So it was really, really great. And that certainly, just for clarification, I've bought silver in the 30s as well. So,
hopefully not too much, but
not that much, but some, yeah,
a little bit, a few ounces, but it's real interesting. Back then, it was nuts. I mean, I remember 100-ounce bars on eBay for basically $1,000 shipped free, and I remember there was no premium on junk silver, back then. Right. Yeah. No premium. I think you could buy it under spot at that point. It was crazy because the world was just in a panic. I don't know if we're going to go back there again or not. I would say probably not, but this is the kind of insanity that you can see in these market panics. So, David, Michael Berry has talked about the Fed, and they're kind of flying blind here, aren't they?
Yes. I'd say the overall theme of Dr. Berry's presentation was we're in this deleveraging, deflationary scenario, and he actually sees it going for quite some time further. And, this is kind of contradictory to what, Bo Polny sees. And myself, I actually, again, I have to, stay consistent. And I said that I think October, which, this month that we're doing the interview, is a time we're going to get a turnaround. Now, it's not going to be huge. It could be. I mean, Bo thinks it will be. I think I'm more modest in my beliefs. But nonetheless, Dr. Berry thinks this is just going to trudge on for a couple more years. But I think that was one point. The main point was that we're in a deflationary environment, deleveraging environment. And of course, when he's on the panel, someone said, well, this is, he didn't call him wrong. He said, I don't get it. He goes, if you go to John Williams and inflation's, 9% and the money supply is totally increasing, how could we be in this deflationary environment? And it was, across the board panel. Myself, I was on the panel as well. And, as an Austrian, you really are kind of limited to what you can say because by definition, an increase in money supply is inflation. It's that simple. It's cut and dry. Yep. And that's a fact. That's happened. But as I explained, most of this money, if not for all practical purposes, all of it has gone into the banking system, and the banking system has used it in the stock market, but very little to practically none has gone into the mainstream economy. It's gone into Wall Street, but not Main Street. A lot of it is sitting on the bank's balance sheets, which means it's in, their bank, but it's dead money or stagnant. It's like sticking it in the vault and not getting into circulation. And Dr. Berry, bore that out with, the velocity of money, which is how much money is circulating in the economy, if people are buying or not, if they're saving or buying. And right now they're saving. So you really can have both, in my view. Even being an Austrian, I'll say it. I'll get some hate mail here, but you have some deflationary forces out there, and you have some inflationary forces out there. And it's like when you take a bobby pin and you straighten it out and you bend it up and you bend it down, you bend it up and you bend it down. Eventually, it'll break. And it's sort of the war between inflation and deflation. It's up, down, up, down, up, down. And you're not really sure, and I'm not, which way it's going to break. I've never ruled out deflation totally. I really doubt it. I mean, Jim Popova probably did the seminal work on that from his study. There's never been a deflationary debt liquidating depression at a time when it was based on a fiat system.
Yeah.
When you've had a debt liquidating depression, like in the 30s, it's when you had a gold-backed dollar. So I'm biased, also studied in it, but it's always a new day. No one knows the future exactly.
Yeah.
So coming back to Dr. Berry and the Fed, if I can emphasize a little bit, they're scared. Really. I mean, this is my take of what he said. They're scared. They don't know what to do. And they're really concerned about interest rates, which, how they can keep their financial repression, those are my words, going, which is these super low interest rates. I mean, who would invest in a bond yielding, a 10-year note of, 2% or 2.2%? And the answer is almost no one, except that interest rates keep lowering. So if you look at the total return over like a year's time, you made like 8 or 10% on these crazy things. So that's the huge market. I mean, these debt markets dwarf all other markets. Equity markets, precious metals are like a spit in the ocean relative to how big the debt markets are.
Yeah.
It is the keys to the kingdom. I mean, I keep emphasizing this because of my, financial background and having gone through the bull market and everything else, as much as the gold and silver aficionado as I am and how important they are, et cetera, et cetera. The big thing to watch is the debt markets, the bond markets. That's where this whole thing is going to have a problem. My very studied view. And you look at what happened in the bond market recently, it was one of the biggest tranches of bonds in like a 10-year time frame. I mean, it was a massive amount of trading in the bond market. And I think that's a precursor to the amount of uncertainty that's out there in these debt markets.
Yeah, it's frightening. And we don't even know the exposure in the derivatives market, because when the market moves that quickly, all those derivatives out there, forget about it. It's you just don't even know. They're not telling us, and you just don't know.
Yeah, no, I agree. I think the derivatives market's going to be where this thing unravels. And again, as I'll back you up, there's so much of it out there. It's over the counter. It's not transparent. There's no regulation. And just because you're on the correct side doesn't mean you're going to get paid.
Yeah.
I mean, you can win the bet or have the right investment or the right protection. You could have, some kind of a put option on a position, a massive position that you have, and think that you're protected. And at the end of the day, find out that your counterparty is insolvent. And then once that happens, it sort of trickles down because all these banks are interconnected. All these financial instruments are interconnected. And it doesn't take much. They're so leveraged. And that's what, again, Dr. Berry was talking about. There's so much leverage in the system that a small move can have massive effects. And that's, I think, the main point to try to understand about the derivatives is that a small move can have a massive effect. And that's what I think a lot of the general public doesn't really understand about leverage, how these markets are set up, why they're so vulnerable, and why the Fed is so worried.
Yeah, and then you get these cascading defaults, and then it all comes to a grinding collapse. And that's really what we're the potential of what we're looking at here is a cascading default collapse. That's what's always scared me,
And me too. And, I've said this recently on shows. It's sort of corny, but it's what I really think happened in 2008. I think we did go over the cliff. And someone, is strong enough, fast enough, and witty enough to take a lasso, and rope it, rope the system like an anvil and catch it and drag it back up over the cliff and start things anew and, put out all these QEs and, talk the markets down and, things go on. But the next time it goes over the cliff, there may not be someone there to lasso it back up and out of the predicament. So, as you said, the cascading defaults can happen very, very quickly. And it did in 2008. It was, in my view, it was very, very close to seizing up where the trust in the system, the confidence in the system had come to a stop. And Bank A didn't trust Bank B's paper anymore. And the only paper that was trusted was the government issued debt. And so they took this toxic paper and traded it for government debt. Of course, that's really what the QE programs are all about, is taking this toxic waste that these banks don't want on their balance sheets and taking that into the Fed, which is worthless trash, and giving them what people trust, which is, government issued debt, which again will get to a point where people don't trust that. And when that's over, do they trust the IMF issued paper or not? Remains to be determined. That's what Jim Rickards believes or stated, if I've heard him correctly. I have my doubts, but it doesn't make me right. But enough is enough. I mean, there's so much debt out there that at some point, again, to repeat for the fifth time, but most important, the Fed itself is worried about it. So we're getting close to the end game, in my view.
Yeah, it's that Minsky moment. It gets to the point where, there's just so much of it that, what do you do here? You just have too much, and something has to give. And I think we're getting to that point. I just can't believe that we haven't gotten to it yet, but somehow they just keep it going. They just keep it going, and somehow the markets are content with it because they're all manipulated and controlled. Is my personal view on it, David.
Yes, they're all manipulated, or yes. There's financial repression. There's control. There's manipulation. I don't know the right word. But basically, if you just analyze it from a very common sense perspective, everything's based on interest rates, and the interest rates are controlled. Yeah. And because interest rates are controlled and everything flows from that, then by definition, everything's controlled. And that's really the truth. I mean, it's very simple when you think about it, but a lot of people aren't really that studied, I guess, or in how the financial system really works. And most people, I think today, the internet, people know that, when you go to a bank and you give them your money, that it becomes the bank's money, and that it's double entry bookkeeping. What's an asset on one side is a liability on the other, and there's all kinds of counterparty risk. I mean, all these things that have come out because of the internet, I think a lot of people know. I mean, I remember in my early 20s and knowing full well that the Federal Reserve was a private corporation, but you said that to 99.2% of the people, and they thought you were lying, that it was part of the federal government. And today, that's pretty well taken because of the internet and the access to information and all the truthers out there, et cetera. So, the times, they are changing, and the first ones now will later be last, as Bob Dylan says. I think that the Wall Street paradigm is going to end at some point, and that a lot of this toxic waste that they have pushed off on the Fed. I mean, the Fed can only take so much, that crap, and it's ending. It's coming up here. People think, well, that'll be bad for gold. Well, I don't think it will be bad for gold. I think outside of the box, Basically, do you want to take on a bunch of bad debt and replace it with quote unquote good debt and do that for infinity? I don't think so. The Fed's saying no, but we got to worry about control. What if they lose control? What if the market takes control? Well, it's always happened in the past. What's to say it won't happen again?
Agreed. So, hey, Morgan Report. How do we get it? Which flavors are available?
I think the best thing to do, Kerry, is just go David Morgan Silver into Google or any good search engine, David Morgan Silver. There's so much out there for free. You just, from there, you can just kind of branch out on all the stuff that we do.
Yeah. It's funny when you get so much stuff out there, eventually, even when you're looking for your own stuff, the best way to do it when you're looking for your own stuff is to Google it. Isn't that funny? Did you ever think you'd be Googling yourself?
Well, it's so funny. I was looking for an article on something, and I Googled it, and it came up with my article, and I just started laughing. Yeah.
It's the funniest thing. I mean, it's really the easiest way. Rather than searching through your own site, trying to find stuff, just Google it, and you'll find it faster that way. And anyways, so just Google David Morgan Silver, and you'll find everything that's available on him. And if you don't want to bother with that, just go click the link in the show notes to this interview on financialsurvivalnetwork.com. Sign up for our free newsletter going out today. And David, always a pleasure. We will talk to you soon, and you be well.
Thank you very much, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.